Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 8th of October, 2025. Stocks fall as investors question Oracle's margins on Nvidia chips. That was the main story overnight. Largely dragged down the rest of the tech sector overall. Oracle shares experienced about a 5% decline over the course of the session. I think it finished down about 3%. As some internal reports indicated its cloud business margins were much softer than anticipated, due in part to a $100 million loss from renting Nvidia chips and getting access there. So this sort of set a negative tone across the sector. Alphabet and Meta both falling around about 1%. As you can see here, SPY was off a little bit yesterday, largely flat in China. And the Nikkei Euro stocks were down. And as you can see here, the Russell and the Nasdaq down 0.71. This pushed the hourlies into sort of technically neutral or negative territory. And having a look here, as you can see, Oracle was down about 2 in the end, or 2.5. Tesla was down 4.5%. They're expected to unveil a more affordable Model Y, aiming to build on recent strong sales. But, future growth may slow as US tax credits expire. But there's still a little bit of conjecture around that. Elon may still be getting some of those tax breaks overall. Tesla's bounced about 0.5% in the aftermarket. Haven't seen too many details come through yet about the Model Y. I think the Tesla Model 3 has come in at around about the 39,900 mark. It's got a smaller battery apparently, but yeah, there's not really any other major announcements outside of that. I think what everyone's waiting for is, judging by the Tesla phobe or Tesla fanboys, is the Optimus. They did have Optimus, the new gen Optimus robots out at the Tron movie launch for Disney the other night, doing all sorts of cool stuff, albeit very useless. So as you can see here, just that Mag 7 sector, and obviously Tesla as well, sort of dragging the market down. We still had, a little bit of weakness or scattered strength across some of the defensive sectors like healthcare services, utilities, consumer staples. A little bit in the healthcare sector, but overall, a fairly quiet night and just a bit of a breather, I think, for the market overall. We've just been notching those record highs every night. There just seems to be, despite there being a government shutdown, we're rolling in now into the second week of this government shutdown. There just seems to be just a trickle feed of good news for markets that's been holding it in there. Any sort of poor market news from this point would not be met very, very kindly, I wouldn't expect. Yeah, this ongoing shutdown is delaying crucial economic data releases, complicating the Fed's decision-making process on interest rates. Some of the Fed-linked data and some of the Fed speeches will still continue this week, so we're told at this stage. But look, you just have to play it by ear there. So we've got Fed Chair Powell speaking. Nothing much out of the Bank of England and the ECB last night. We've got the Bank of Japan governor speaking today. Their market was up quite heavily. Yes, a couple of days ago on the announcement of their first female prime minister, who's a big fan of Abenomics, which is largely printing money. So that's usually good for stock markets, albeit it usually drags inflation into the picture at some stage. Japan hasn't really had inflation for 30 years, but we're starting to see the first signs of it over there. We will have some okay size company announcements towards the end of the week, with BlackRock particularly. Might be some insights from Pepsi, but I highly doubt it. And as you can see, there's no economic figures really moving forward. Constellation Brands saw a modest rise after reporting better than expected results. Gold prices, as we just move on here, touched 4,000 for the first time in history overnight. Although it seems to me that move is probably just more that the market wanted a 4,000 close rather than anything else. Copper was up, but the other precious metals were down. Silver slipping a couple of percent, but I mean, let's face it, we've been up to 48.60, which is very close to the all-time high. It's probably due for a bit of a breather after, rallying a good sort of 16% for the month so far, and through some pretty significant multi-decade highs. I would expect that to probably stabilise over the next week, potentially. Same with platinum in particular. Palladium's been making a bit of a run as well, sort of platinum's poor cousin. Gold prices, to be honest, I'm really getting the feeling that gold wanted that 4,000 level, and now it's got it. I think it'll probably follow silver and platinum backwards a little bit. There may be a little bit of buying in that gold and gold miners sector on the open today for the ASX, but I'd probably be a bit more inclined to sell into it rather than be buying up here as it stands at the moment. So lithium took a breather as well as uranium and Bitcoin, but look, significant gains over the course of the week. Iron ore's been very quiet for the last week as well. Aussie dollars drifted off, and for some reason we've got that US dollar drifting higher despite the fact that the country's in just disarray realistically at the moment. It's outside of those, those AI hyperscalers. You haven't really had too much good news to talk about. Trump announced some more tariffs that are going to come in on November the 1st. I can't even remember what they were. And I think oil dropped a little bit overnight. Actually, it rallied a little bit, but oil prices declined early due to concerns over supply from smaller OPEC nations, OPEC plus nations increasing their supply. So just generally, I would say, apart from gold and copper, just things having a little bit of a rest for the minute, and that the concerns around Oracle and monetizing AI really going to be at the forefront of people's minds, I think, this earnings season, which will kick off next week with the banks, and then the following week you're going to start to see some of those Mag 7 earnings. So it'll be interesting to see how they go. They are sort of at the forefront of people's portfolios, and really what's been saving this market, generally from probably just an absolute plethora of just generally bad news. So, but these are interesting times in terms of being an industrial revolution style event for markets, and it'll be very much a case of the haves and the have-nots over the coming couple of earnings quarters, next 6 months or so. Certain thematics will do extraordinarily well, whilst other thematics will probably start to die off, and people will start to realise that the valuations can't be justified on the back of one small concentration of 10 stocks, which is making up such a large weighting of all the indexes at the moment. We had our free webinar series yesterday, the Security Super Cycle. For those of you who haven't seen, I've got the full YouTube video of Oleg Vornik from the CEO of Drone Shield yesterday, which that thing hit about a $5.7 billion market cap, which is getting up there, pretty rich. The picks from our last webinar are still beating the S&P pretty well at the moment. You can get an on-demand version of the Security Super Cycle. You just go and register at the same page, or register for the next one, the AI automation and robotics on November the 4th. You do get them on demand afterwards. You get a little ebook as well, which is about a 20-page book on the investment theme and where we're looking and where we're seeing good gains potentially over the next few years. Also, I released an article on Livewire last night on AI automation and robotics. This is a bit of a precursor to that webinar that's coming up next month. So it'll be about 24 odd days away, or 25 odd days away. So I'll put that in the comments field in the in the live the live sections of our socials, and you can register, or you can check out the Livewire article, or my conversation, which goes for about 25 minutes with Oleg, which is super insightful on that security super cycle and drone technology and the use of drones, etc. And despite that eye-watering valuation they've got there at the moment, you can kind of see why people are so excited about this company, because they've got civilian applications and obviously what's going on in Russia, Ukraine, and NATO nations like Poland, etc., and the way that modern warfare is happening these days. It's not just jets and Tomahawk missiles anymore. You know, you can sort of starve your adversaries by sending cheaper drones, and because they can't keep sending expensive missiles. So yeah, super insightful interview there with Oleg. It was great for him to join us. But yeah, in terms of what's going to happen today on the ASX, James Hardie did pop about 9% overnight. They've got to get their earnings and their updates in order. It's been an absolute, excuse my language, but shit show there for the last, for the last 6 months. They've reduced their outlook, and then now they've come back with better than expected. It's been an absolute mess there with their reporting recently, which is not what you want from a company that's been around as long as it has been and is trading in 2 countries. But it was up about 9% overnight. The dual listing building materials company reported preliminary net sales for the second quarter that beat analyst estimates. I'd expect the healthcare sector to be, and the defensive sectors to be, largely well supported today, as per the US. I think there's some good bargains out there in those defensive sectors as it stands at the moment, and that's where this is the sort of time where you want to be making those switches, because no one wants them. They're very unloved at the moment, and they're very cheap because everyone wants these super high growth. But this hyperbolic growth can't go on forever for a number of stocks. So, for instance, we trimmed some Clarity yesterday at above $5.30 or $5.20, and rolled back into Telix, which is a much more conservative name. We bought some healthcare names last week, the likes of Woolworths, etc., as well. Really downtrodden as it stands at the moment. So, those really hot thematic stocks might start to see some buzz come out of them, because there is a fair bit of valuation priced into some things that really aren't particularly justified. So, but have a great day, and we'll speak again soon.
General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.